Everyone knows Bitcoin is the largest cryptocurrency. But did you know that Ethereum has the largest ecosystem? It hosts and secures hundreds of billions of dollars in value via its tokens and protocols. And this is why dozens of cryptos have chosen to leverage Ethereum's virtual machine for smart contracts. And these so-called Ethereum killers were some of the top performing cryptos in the last cycle as a result. This time around, there is a new cohort of competitors that have taken Ethereum's technology to the next level. And one of them is Sei. And this begs the question if it will also see the same eye-popping returns. Today, we find the answer. Stay tuned. I'll start by saying that nothing in this video is financial advice. It's purely educational content intended to inform you about Sei. And I'll also note that some other members of Team Coin Bureau hold Sei as part of their personal crypto portfolios. But rest assured that this will not affect the objectivity of today's altcoin review in any way. And if you happen to be curious about which cryptos we hold and which ones we're personally considering, you can find out by joining the Coin Bureau Club. Members also get access to weekly altcoin reviews, daily altcoin alpha, and real-time altcoin analysis and discussion in our Discord. The link will be down in the description. That said, we first reviewed Sei for our Coin Bureau Club members in late December last year when its price was starting to go parabolic. We cautioned that Sei was likely to see more pain before it would see more gains, and in retrospect, that prediction was spot on. The pain came, and the gain, well, it could be next. But we'll come back to that a bit later. First, let's start with a quick recap. Sei was founded in early 2022 by Jeff Feng and Jayendra, aka Jay Jog. Jeff used to be an investment banker at Goldman Sachs and worked at a crypto VC firm before founding Sei. As for Jay, he spent most of his career prior to Sei working at Robinhood as a software engineer. Jay was inspired to create Sei after the GameStop saga in 2021, which you can look up in your own time. Sei was originally created to be a decentralized competitor to centralized stock exchanges like the Nasdaq. And if this sounds familiar, well, that's because it's the same reason why Solana was originally created. Just like Solana, though, Sei evolved to become a general-purpose blockchain which caters to multiple use cases. The difference is that Sei decided to leverage the EVM for its smart contracts. And this was because it would make it easier for Sei to gain users, developers, and liquidity, as I noted in the intro. As also noted in the intro, though, there are dozens of these EVM-based Ethereum killers. So what makes Sei different? The answer is threefold. First, Sei uses a Cosmos-based blockchain. For context, Cosmos-based chains are the most battle-tested proof-of-stake blockchains around. Sei chose to use Cosmos's technology, or rather the Tendermint consensus, because it would decrease the risk of stuff like frequent outages that we've seen on other fast blockchains like Solana. And if you've been keeping up with our Ethereum updates, you'll know that even it has experienced issues since the merge. The difference between Sei and other Cosmos-based chains is the second thing that makes Sei unique. And that's its optimization of Tendermint, called the Twin Turbo Consensus. And this involves a combination of compressing transactions so that blocks are propagated faster, and of course assuming that these blocks are valid. The third thing that makes Sei stand out is probably the most significant, and that's the fact that it managed to parallelize the EVM. And as the term suggests, this makes it possible for Sei to process smart contract transactions in parallel. Although Sei's mainnet launched back in August 2023, its parallelized EVM didn't launch until July this year, and that's basically why Sei's price has been rallying recently. Now, in case it wasn't clear enough, Sei's three innovations make it incredibly fast. Its website notes that it has a block time of just 380 milliseconds and can process over 12.5 thousand transactions per second. And more importantly, transactions on Sei are final in a single block, which you'll recall is 380 milliseconds. While Sei is technically the first crypto to launch a truly parallelized EVM, it won't be the last. Another crypto project called Monad will be launching its parallelized EVM chain later this year. And Monad's $225 million raise in April seems to have hyped up the parallelization narrative and pumped Sei's price as a result. To put things into perspective here, Sei raised just $45 million in total across various ICOs in 2022 and 2023, but we'll come back to that a bit later. In the meantime, if you're enjoying this video so far, be sure to smash that like button to let us know, and subscribe to the channel and ping the notification bell as well so you don't miss the next video. Now, even though it's been 10 months since we first covered Sei, not that much has happened since then. The biggest news in January was the emergence of the Super Saiyan themed meme coins. For reference, Super Saiyan is something that's part of the popular Dragon Ball manga and TV series. The reason why this news is worth pointing out is that prior to the Saiyan meme, Sei didn't really have something that made it stick out from the other Ethereum killers, including Monad. Jay revealed in an interview in February that this helped Sei grow its community, and it's likely to continue helping. Now in March, Grayscale announced that it had added Sei to its Dynamic Income Fund, or GDIF, and as the name suggests, the fund aims to earn yields on staked cryptocurrencies. It's unclear how much of the GDIF is allocated to Sei, but it's clear that it's not a lot, and that seems to be because it's included in the Others box. In case you're wondering, Sei staking rewards are currently around 5% per year for validators and delegators with a 21-day lockup period. And validators must stake or be delegated enough Sei to make it into the top 39 to become a part of the validator set. Thankfully, there's no minimum Sei stake as a delegator. Anyways, in April, Sei announced a $10 million creator fund with Gitcoin, an Ethereum-focused donation platform for crypto projects. The Sei Gitcoin Fund launched in June, encouraging development on Sei, obviously. And I'll quickly note that Jay also revealed that Sei seems to be short on developers. Now, in May, NFT marketplace OpenSea added support for Sei shortly after the initial launch of its parallelized EVM, whose rollout had begun earlier in the month. And this is interesting because OpenSea doesn't support that many chains. It's quite selective. So its selection of Sei could therefore be a kind of a bullish sign. On that note, there were more bullish signs for Sei in June. Interoperability Protocol Layer 0 also announced that it had integrated Sei, and crypto indexing protocol The Graph followed suit. As a cherry on top, Sei launched a learn-to-earn campaign for Sei with crypto-friendly bank Revolut. And in July, these bullish signs turned into bullish catalysts. Sei completed the launch of its parallelized EVM with crypto analytics platform Dune adding support for its chain. And Sei also announced a $50 million ecosystem fund in Japan that would focus on GameFi, SocialFi, and other such use cases for Sei. However, it wasn't until August that these bullish catalysts started affecting Sei's price. And that's because Sei was missing one of the key ingredients: liquidity, aka money. The first liquidity boost came with the addition of USDT and USDT via Stargate Finance, and the second came with market makers like GSR getting involved. The third boost to liquidity was the biggest, and that was Binance adding support for Sei's parallelized EVM network. The practical effect of this is that it makes it easy for Binance's 200 million users to easily move funds in and out of Sei the same way they can with other EVM chains, like a de facto bridge. It should come as no surprise then that Sei hit over $200 million of total value locked in its DeFi protocols. What is surprising though is that lots of Sei's TVL could soon come from ETH. And this is because of a new kind of liquid staked ETH called Super Saiyan Staked ETH, or SSETH, which launched in September. At the time of shooting, SSETH yields are a staggering 46%. And as you might have guessed, most of this yield comes from the token rewards you get for minting and holding SSETH. And if the value of these tokens falls, then the actual returns will be smaller than 46%. Conversely, if they rise, the returns will be higher. And now for everyone's favorite part, Sei's price action. As mentioned earlier, our Sei prediction, well, it came true. After we covered it in late December, Sei went a bit higher for a couple of months before collapsing. And as always, there was a lots of FUD around Sei's price collapse, such as OTC sales by the team. Speaking of which, it seems that there were OTC sales of Sei around this time. And for those unfamiliar, OTC sales are common among crypto projects. The discount on these OTC sales gives you a sense of how bullish investors are on the project. Of course, rumors of Sei selling at a big discount were part of the FUD. In any case, Sei's recent recovery has made the FUDers predictably silent. And consider that many of them were alleging that Sei's parallelized EVM would never launch. And you'll remember that it launched without a hitch in July, and more than half a dozen crypto companies have since integrated Sei's EVM during this period. Even so, there seems to have been some truth to this FUD, and it lies on the supply side of Sei's economic equation. According to historical data from CoinMarketCap, Sei's supply has increased by more than 1.2 billion over the last 10 months. Assuming an average Sei price of around 50 cents, well, this works out to as much as $600 million of potential additional sell pressure, which is a lot for a crypto project of Sei's size. To make things worse, data from Token Unlocks notes that the Sei sold to investors began vesting last month. And as you can see, the vesting schedule for this Sei is fairly aggressive. Now consider that these early investors are up anywhere between 4 to 9 times, depending, of course, on which funding round they participated in. And this foreshadows even more pressure for Sei in the coming months, which in turn puts pressure on Sei to create demand drivers for its coin. The good news is that exponential growth in Sei's TVL suggests this demand is coming. The bad news is that there are only around 40,000 monthly active wallets. Not only that, but if momentum in Sei's TVL or the crypto market more broadly continues to decline, this apparent attempt to kickstart Sei's mass adoption, it could fail. The silver lining is that Sei is in a perfect position to benefit from an ETH revenge rally and resurgence in Ethereum's ecosystem. If we're not mistaken, Sei is technically the fastest EVM chain, and this theoretically makes it a number one destination for liquidity on Ethereum and other EVM chains. In practice, though, this could be different, as Sei is essentially competing with Ethereum's layer 2s, which are, to all intents and purposes, just as fast. Regardless, the fact of the matter is that Sei is likely to rise along with ETH and Ethereum's ecosystem, assuming both mount a long overdue recovery. Some combination of these catalysts could be enough to take Sei back up to its spring highs of around $1 in the short to medium term. In the longer term, Sei's moderately sized market cap, low price tag, widespread exchange listings, and Dragon Ball memes could be enough to propel it much higher. The caveat, of course, is all the sell pressure that's likely to come from Sei's early investors and, of course, the team, whose vesting period likewise began last month. This could limit Sei's longer-term potential, especially when you factor in all the ecosystem spending that seems to be going on and which is likely to continue. For what it's worth, Sei technically has no inflation, unlike most Cosmos-based cryptos. Now, given these facts, we believe that Sei could grow roughly as large as Avalanche did during the last bull market. And this would mean a market cap of around $20 to $25 billion, which would translate to a 10x from Sei's current prices when you account for all the vesting and sell pressure Sei is likely to experience. And if you want to super saiyan those returns, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on the best crypto exchanges. You see, these deals, they won't be around for long, so take advantage of them ASAP using the link down below. Now, whether Sei can hit a 10x or more ultimately depends on its upcoming milestones. Unfortunately, Sei's only roadmap milestone for 2024 was the launch of its parallelized EVM, which of course already happened. Fortunately, a few additional milestones can be found in Sei's socials and in interviews with the team. In early September, Sei hinted on X that it would be adding support for more stablecoins. This presumably means that they'll be launching natively on Sei. It seems they're all bridged from other chains for now. And Coin Bureau Club members will know that Circle is a big backer of Sei, suggesting, of course, native USDC will be coming to Sei soon, and this would further boost its TVL and expand its potential use cases. And back in May, Jay hinted that Sei would be focusing on GameFi and SocialFi, and I'll remind you that it launched the Japanese ecosystem fund to bootstrap those kinds of crypto projects back in July. In August, Jay revealed that a big SocialFi app was coming to Sei, and that GameFi continues to be a focus as well. And that's why it's strange that Sei continues to double down on DeFi, where it doesn't really stand out. And this, of course, brings me to the challenges that we foresee for Sei. The first challenge is, well, competition. And if you include Ethereum's layer 2s and layer 3s, there are literally hundreds of smart contract cryptos that support the EVM. It's hard to see what makes Sei stand out, and even its own founders seem to be realizing this. Let's be real. Retail investors aren't going to be aping into Sei because it has a parallelized EVM. They probably won't be aping into it either because it's super fast, because there are much faster blockchains out there like Aptos and Sui. From our perspective, the only way Sei will stick out is with a killer dApp. And this ties into Sei's second challenge, and that's development. With so many EVM chains, there's lots of competition for developers. And when it comes to parallelized EVM specifically, the fact that Monad has raised so much more than Sei gives it the financial firepower required to recruit the best of the best. To Sei's credit, they've shipped a robust blockchain with cutting-edge tech in 2 years. However, the same can't be said for current dApps. Now, take Yay Finance, for instance, Sei's largest DeFi protocol by TVL. It's an almost identical copy and paste of Aave. For Sei to succeed, it needs development at the dApp level too. And this relates to Sei's third challenge, and that's adoption. And a failure to launch a killer dApp could mean that Sei would fall behind its competitors very quickly. Even if Sei does manage to guarantee that it will get adoption, there are many examples of killer dApps that just never grew. The catch is that stablecoin regulations could change this. And if you watched our recent video summarizing Visa's stablecoin report, you'll know that stablecoins could be the most fundamental killer use case of crypto. The smart contract cryptos that support these stablecoins will benefit the most by extension. And this pertains to Sei's apparently close relationship with Circle, which should not be underestimated. The fact that Circle invested an undisclosed amount in Sei late last year suggests that the stablecoin issuer has big plans for Sei, and Sei's parallelized EVM could be the perfect environment for USDC. And that's why some of us here at Coin Bureau are bullish on Sei, but not all of us. On the one hand, Sei checks every box for a crypto project that should do well during the crypto bull market. On the other hand, it faces hurdles which it may not overcome, including the aforementioned vesting schedule. With a bit of luck though, Sei will be able to differentiate itself from the other EVM-based Ethereum killers and Ethereum's own execution layers. And given that meme coins don't seem to be going away, it's quite possible that the Dragon Ball theme and the related memes could be enough to do the trick. That's all for today's video. If you found it informative, smash that like button. And if you want to stay informed about promising crypto projects, be sure to subscribe and ping the notification bell as well. And if you want to inform others about Sei, well, why don't you share this video with them? Thank you very much for watching, and I'll see you next time. This is Nick, signing off.